Asian markets headed south in today's trade as investors awaited the US Fed minutes to give guidance around the timing and the extent of any possible rate cuts. Despite the wobble, market sentiment is said to have been markedly improved as market players continue to anticipate a rate cut at some point this year. The Nikkei share index fell by 0.31%. The Hang Seng index declined by 2.12%, while the Shanghai Composite index also lost ground, falling by 0.42%. Over in the United States, markets put in mixed performances, with the S&P 500 on track to set a new record high for the 24th time this year, while the Nasdaq reached an all-time high at the close, driven by an anticipation around a good earnings report set to come from Nvidia. A number of Fed Reserve officials are expected to make statements this week, with the FOMC minutes also due out this week, which could give market players bigger clues around when rate cuts could take place. The Dow Jones Industrial Average ended the day down 0.5%. The S&P 500 rose by 0.1%, while the tech-heavy Nasdaq powered to an all-time high by 0.7%. Locally, the rand is trading at 18.17 to the dollar, 23.10 to the pound sterling, and 19.75 against the euro. The JSE is red across the board at the intraday. The all-share index is currently 0.5% lower at 79,598 points. The industrial 25 index is off 0.4%, while financials have fallen by 0.3%. The top 10 resources index has declined by 0.8%, and the precious metals and mining index is 1.5% down. On the capital markets, the yield on the R18 government bond, R186 government bond is 9.06%, and the yield on the R2030 is at 10.3%. Markets in Europe are trading in negative territory at this hour. Britain's FTSE 100 is 0.4% lower. The CAC 40 in France is down by 0.8%, and Germany's DAX is 0.5% weaker. Looking at commodities, gold is trading at around $2,418 and platinum at $1,038 per ounce, while the price of Brent crude oil is trading at around $82.90 a barrel. Well, to break down the markets for us, I'm joined by Makwe Masilela. He's the Chief Investment Officer at Makwe Fund Managers. A very good afternoon, Makwe. So we see, of course, that barring what's been happening with tech stocks, markets seemingly taking a breather. There seems to be some apprehension as they kind of wait to see what's going to happen with interest rates.
Definitely, and tomorrow waiting for those Fed minutes. But I think the most important thing is that, remember, markets got excited, number one, when we got those worse than expected job numbers from the US, and then followed by that soft inflation data that started raising or increasing the bets that definitely we might be getting a rate cut come September or so. But now we got some comments coming out of Fed officials warning us that inflation is still at elevated levels. They're still not convinced that this is the time to cut. So I think what will better work for market participants is to stop analyzing all this data, trying to be clever to see what will be the next move. Just listen to the Fed officials, whether they're right or wrong. But these are the guys who are going to make a call when they will start decreasing or cutting interest rates. So comments that came out yesterday, and we expect more as well today, that started to dampen the outlook when it comes to the market itself. Hence, we see not just local, but also internationally, that the market is taking more of a breather more than anything.
So what happens to the market psyche? I mean, yesterday the markets were doing quite well. Even some of the US markets closed in positive territory, with the Nasdaq hitting an all-time high. What happens to the psyche such that everything now is on a downer? Even the commodities, they were doing really well, which is great for South African exporters, but then now we're on a back foot.
Remember, when it comes to the commodities, maybe starting with that, we had expectations that China will definitely come with serious stimulus. But what we've seen last week, Friday, and also on Monday, what they did to try to help the struggling property sector, which accounts for almost 80% of the economy, we realized that, yes, it's a step in the right direction, but it's not sufficient. So now that is cooling down the market expectations about the stimulus that side, and it's got an impact when it comes to commodity prices. But so far for the past 2 years or so, markets have been driven by central banks. So markets' mood has now changed after getting those comments stating that the scope has just lessened when it comes to interest rate cuts compared to the expectations that we had. So hence we see people using that as a way to start taking profits. And definitely there will be some minutes that will be reading tomorrow if we continue to say that the can still has to be kicked much further before they can start picking that up. That as well is going to affect the market performance, to say interest rates are going to stay higher for much longer, and we know the impact on that when it comes to companies and also households, because now affordability that has been there will continue to be under strain, and also the repayments of whatever that needs to be repaid continues to be high. Then you're just left with less money to be able to spend on other things on the economy.
Yeah. So locally, we've had quite a few updates from companies. Let's take a look at Coronation Fund Managers. They released their half-year results for the 6 months ended March, reporting revenue up 4% for the first time. And for the first time, of course, they're giving shareholders a dividend, because the last time they couldn't, because they said that money was tight to mention as they were having a brawl with SARS. What do you think about this particular stock?
I think, happy days are back again, for the fact that as much as they managed to increase revenue, look into the assets under administration or under management, those as well managed to be increased by almost 5%. I mean, the guys are now managing just under 650 billion rands, so that's good for them. Yes, we've seen the South African markets has not done that well. Why we're mentioning that is that we know they take those funds and invest them in the markets, but now still having said that, the guys still manage to make a good earnings when it comes to funds under management, because that's how they prefer to measure their financial performance as compared to headline earnings per share. Still, they manage an over 100% increase when it comes to that. The point here is that they continue to attract more money, as we've seen with the asset under management increasing just for 6 months by 5%. And I think they've made a serious provision when it comes to the issue of SARS. That's just over 700 million or so.
So Transaction Capital, they also released their half-year results. Of course, they recently spun off their We Buy Cars company. Is this company really going to improve, given that they've almost got rid of the crown jewel, which was We Buy Cars?
I don't think so, up until they get the approval from the creditors when it comes to the business plan that they submitted when it comes to SA Taxi. We've seen SA Taxi continues to be a drag. We've seen that even the company called one of the subsidiaries, Mobilize, which had what you call an exposure when it comes to SA Taxi insurance business, the guy said to realize a loss of almost 1.8 billion. So my point here is, up until they sort out that mess, then probably maybe we might start seeing some improvement. And we've even seen the market reaction that as much as the guys now have got a net cash position, managed to reduce their debt by that listing and bundling of We Buy Cars, market participants are still not too happy. At some point, the share price was down almost 4%. And yes, we know that as it stands now, Transaction Capital, I mean, their market value is just over 2 billion. We Buy Cars is just under 10 billion. So you are right that without We Buy Cars, people have the reason to start doubting them. But I think if they can turn around the SA Taxi situation, most probably they might start to do something better.
We'll wait and see. Thank you so much, Makwe Matilela. He's the Chief Investment Officer at Makwe Fund Managers.